Hello, my name is Treboris Carnes. I'm the moderator for Allison James, and today we'll be conducting the webinar titled How to Close More Deals in 2014 with the VA Loan. Our leader for today, who will be helping facilitate, is Mr. Jeff Jabora, the National Director of Development for Allison James, and I will give the floor to Jeff.
Hello everyone, thank you for attending our webinar today. My name is Jeff Jabora. I'm the National Director of Growth and Development for Allison James Estates and Homes. If this is your first time attending one of our webinars, please allow me to give you a quick overview of what to expect today. Each month we host a free continuing education or best practices training webinar to help our agents and outside agents close more sales, make more money in less time, so they can enjoy the quality of life that comes with being a successful real estate agent. These sessions are 100% education-based. Our sessions last about an hour, and we open the line for a live Q&A session at the end. Any questions that aren't answered will be summed up and collected, and our presenter will follow up with you on that afterwards. If you're not currently an agent with Allison James Estates and Homes, you've probably been invited by us or another agent who is. That's absolutely fabulous. As the National Director of Growth and Development, I'd like to extend a special welcome to you. If you're currently considering a brokerage change, I'd love to have the opportunity to speak with you. Please feel free to give me a call or send me an email afterwards, and I'd be delighted to touch base with you about the benefits of our brokerage. Before I introduce our speaker for today, I'd like to take a quick minute to share the Allison James Estates and Homes story with you, a little bit about who we are, where we came from, and where we are going in this industry. Our CEO is Matt Crumbaugh, and Matt brings a wealth of knowledge and an entrepreneurial background to the table, and he is really bringing us into the future of the real estate industry. And with that, we also have his wife, who is also the vice president of our company, Jessica Crumbaugh. She is a top-producing realtor. She brings a wealth of knowledge to the table, training, and mentoring. In the time that we've been open, we've had a lot of success and gained a lot of ground. We have a lot of clout in the industry, a lot of brand recognition. We've done a lot of great things. As you can see here, Matt Crumbaugh was actually just voted in the top 100 most powerful people, number 99 to be exact, of most powerful people in the entire residential real estate industry. Our production speaks for itself. We're in the top tier across the board for different aspects of real estate, including closed transactions, sales rank, etc. One of the main things that attracts agents to our brokerage, definitely not the only thing, is the fact that we do pay our agents 100% of their hard-earned commission. We have a couple of different programs to choose from, and our plans cater to agents of all levels of production. We do have about 800 realtors nationwide. We are currently in 17 states and looking to continue to expand. So without further hesitation, I would like to introduce you to our speaker for today. RJ of Movement Mortgage will be presenting how to close more sales with the VA loan in 2014. Thank you, RJ.
Thank you, Jeff. Hello, everybody, and happy Wednesday. Happy Hump Day. So before we get started, just want to make sure everybody knows that I will be more than happy to address everyone's individual VA questions at the end of the seminar. My contact information is above on the screen. I'd strongly recommend downloading the handout that Jeff talked about just so you can have as reference on your computer for future reference and questions. So before we get started, just letting everybody know there's going to be a lot of numbers presented. I'm trying to do the best to simplify the process and let you understand the benefits of using a VA loan. So let's get started. Benefits of the VA loan. Well, first of all, the most pronounced advantage is using 100% financing. That's right, VA loans allow no down payment for the qualified veterans, and we have different loan amounts for different counties. The nationwide VA loan amount, which we call a conforming loan amount, is $417. However, there are other markets which are considered high balance markets and what they would consider higher than conforming loan amount limits, and we call these high-cost areas. It did provide links for you to locate your county because the VA maximum loan amount will vary from county to county on the conforming VA loan limits, and that is included in the handout. A VA loan can be financed from a qualified veteran up to $1 million. Now, there is a down payment calculation, which we will talk about later in the webinar, but just for most people who don't understand this, a VA loan can be financed up to $1 million loan amount. And then we'll also talk about the VA funding fee that is included in the maximum loan amount. With that said, a minimum FICO score requirement of 580 is required for the qualified veteran up to the 417 conforming loan amount. Now, to get qualified for the $1 million loan amount, a veteran must qualify with a 680 middle FICO score. One of the other benefits with my company, Movement Mortgage, is we do not charge an origination fee to our veteran. That's right. There is a no origination fee charge when you're closing your VA loan with Movement Mortgage. In addition to that, many people often ask about the associated lender fees, also known as junk fees. With Movement Mortgage, we do not charge any associated lender fees, such as processing fees, loan doc fees, to our veteran in the transaction. So the added benefit with Movement Mortgage is there is no origination fee and there are no junk fees associated with the transaction. Let's talk about the product definitions. By definition, the VA mortgage is a government-based product which is available to the veterans and reservists of the U.S. military, offering up to 100% financing. Basically, what we're telling you is that this is for all veterans that are either active duty or have completed their active duty service, as well as reservists and the U.S. Coast Guard. Many people don't understand that we also extend VA benefits to widowers of a veteran. We talk about the maximum loan amounts that I mentioned before. We did talk about the conforming limits. And as I addressed earlier, there is a link that you can link onto to find out if your particular county has a higher than normal VA conforming loan amount, such as the example of 417. Such areas like Hawaii and Alaska have much higher conforming VA loan limits where you can put no money down. So do use the attachment that was offered in this webinar to locate your particular county. As I said earlier, the VA funding fee is a charge that VA charges the veteran for using his VA benefits. And we'll talk about the actual calculation of the VA funding fee, but if you were to use the maximum VA $1 million loan amount, the additional funding fee charge is a percentage, which would be a total of $33,000 on top of the VA maximum $1 million loan amount. Now let's talk about the guarantees. In the attachment, we've also offered how to find out the eligibility and the guarantee of the VA and the veteran's use of his eligibility. This is a calculation that I can go in further at the end of this webinar, explaining the difference between the guarantee per county as well as where the veteran and the home purchase is being made. Because of the fact that it is a regional by region, county by county calculation, it's more than what we can conclude in this particular presentation. That is why we've offered the link as well as my availability after the webinar to talk about each county's eligibility and guarantee rate. Let's move on to FICO scores. Since credit in the industry is so important for lending, it's important to know what your veteran has and what is the availability of the veteran can qualify for a VA loan. Like I stated earlier, a minimum FICO score of 580 is required to get to the conforming loan amount, meaning the 417 amount. Anything above the 417 loan amount is considered high balance and jumbo, and that requires a minimum of a 680 FICO score with Movement Mortgage. The system that we use to approve our loans is called the AOS system, and it is our way of using the calculated risk of the veteran in terms of the qualifying ratios, which is the home purchase and all monthly obligations calculated into the gross monthly income. We use the system to give us a layered risk outcome. This has enabled us to give us the loan guarantee, which in turn gives us the faster turnaround time. At Movement Mortgage, one of the unique differences is when we underwrite a file, the process is completely different than most traditional lenders. We like to take the loan file directly to an underwriter first after the loan has been submitted, and that underwriter's decision from the first point is required to give us a decision within 6 hours from submission date. This enables us to close a loan in 21 days or less on all purchases. In fact, Movement Mortgage averaged 91% of their submissions closed in purchases in 21 days or less using VA financing. This allows us to be able to negotiate very fast escrows with our agents that allow them to make aggressive offers. Our back-end ratio is limited to 41%, which there are exceptions to go above that, and we have what's called loan committee. This enables us to be able to write extenuating circumstances to help the borrower qualify for more house and let the underwriter see that there are other areas such as residual income and asset reserves that allow us to qualify a borrower above the 41%. Another thing to point out is when you're dealing with a VA buyer, it's important to get a good rental history. This allows the underwriter to understand the qualifications of the veteran and their past history of rental. Having a good clean credit history is important, but more importantly is their past rental history. We require at least a 2-year residency background check, and we want to be able to have a clear rental history from our borrower in order to qualify for a purchase loan. This enables us to be more aggressive in terms of the buying power as well. At Movement Mortgage, we don't have what we call a loan decline. Whenever the loan is in a situation where the ratios are either too high or the credit is questionable, we refer to loan committee. This requires our head underwriter to take a review of the underwriting decision that has been made incomplete. Incomplete is our way of being able to give one last review to make one final decision on a loan that could be at risk. Risk factors would include low FICO scores, low reserves, or poor credit history. An example is last year, Movement Mortgage closed over 16,000 transactions, and 11,000 of those loans were closed in the 21-day purchase period on our contracts. That means we're able to move through the process much faster than the competition and be able to help assist agents close transactions fast. Let's move on to borrower eligibility. Now, many people don't understand this, but believe it or not, there are many qualifications that allow a person to use a VA loan. U.S. citizens are eligible with no restrictions. Permanent resident aliens are eligible for a mortgage on the same terms as a U.S. citizen. Documentation must be provided to evidence permanent residency. Non-permanent resident aliens, these are people that are eligible for a mortgage on the same terms as a U.S. citizen. The borrower must have a valid Social Security number. Documentation that the borrower is legally residing in the U.S. must be supplied. The borrower also must be eligible to work in the U.S. and is evidenced by an employment authorization document, known as an EAD, issued by the Bureau of Citizenship and Immigration Services. One point to make, many people don't know this, is you cannot have a non-occupying co-borrower on a VA transaction. For example, the purchasing transaction has to involve a veteran. It could be 2 veterans. It could be a veteran and a spouse, but it cannot be a non-occupying co-borrower to assist a veteran in a purchase. I hope that clarifies. A non-occupying co-borrower is not allowed on a VA loan. Talking about proof of service. So there are several ways to document the proof of service, and what all lenders require is we need a form that's called a DD-214. The letters DD and the numbers 214 are printed on the document, and it's referenced as their notice of discharge. So anyone who has actively served the military and has left the military will have a DD-214. This is a certificate of release or discharge from active duty. It generally will contain all information needed for the VA to make an eligibility determination, which gives us what's called a certificate of eligibility. So the DD-214 talks about the discharge of the service, and that is what the loan officer needs in order to get a certificate of eligibility, also known as a COE. The COE allows us, the lender, to know that that veteran is eligible for the guarantee program to which he can borrow the VA financing. Now, with veterans still on active duty, we have to address this with the veteran and ask them for proof of service. We call this a statement of service, which all active members can go to their commanding officer and get a letter called a statement of service. It needs to show that they've been at least at a minimum of 90 days of active service to be eligible for the program. Now, there's one note to also make in regards to Coast Guard members. There is no one form used by the Reserves or National Guard that is similar to the DD-214. So it's important to make sure that if you're dealing with a reservist or a National Guard member please get them in front of your loan officer, your movement mortgage loan officer, so we can help them and coach them to get the necessary documentation to obtain their discharge notice to then get them the certificate of eligibility. Now, with current reserve and guard members, these are individuals who are still members of the reserve and guard, and they must provide a statement of service, like I said earlier, the statement of service signed by or the direction of the adjutant personal director or commander of the unit higher headquarters that they are attached to. This is, again, something that the loan officer at Movement Mortgage can coach you on in terms of getting the necessary documentation for your veteran. When we talk about the general rule of eligibility, a veteran is eligible for VA home loan benefits if he or she has served on active duty in the Army, Navy, Air Force, Marine Corps, or Coast Guard after September 15, 1940, and was discharged under conditions other than dishonorable. So everything that is honorable is accepted under the VA Guarantee Program. When we talk about eligibility for reserves and or guard, members of the reserve or guard who are not otherwise eligible for loan guarantee benefits are eligible upon completion of 6 years service in the reserves or guard. I repeat, someone who's in the reserves or National Guard must have at least 6 years in order to be eligible for the same VA eligibility that an active duty member was who has served. I'll repeat that. The eligibility for a reserve or National Guard must have 6 years of service to receive the same benefits as an active duty member who has served his time in the military. Let's talk about the eligibility of spouses of veterans. Some spouses of veterans may have home eligibility using their VA program. They are the unmarried surviving spouse of a veteran who has died as a result of service to service-connected causes. The surviving spouse of a veteran who dies on active duty connected causes who remarries on or after the age of 57 and on or after December 16, 2003. This gives that widower or widower the eligibility of the VA benefits. The spouse of an active duty member who is listed as missing in action or prisoner of war for at least 90 days is also eligible. The eligibility under this missing in action or prisoner of war provision is limited to a one-time use only. Let's talk about the owner occupancy. So in regards to owner occupancy, the VA program is ideally addressing owner occupants. That means primary residence. 1 to 4 units, single-family homes, PUDs, condominiums. This is telling the veteran we basically allow the veteran to use his benefits to occupy the property as a primary residence. It must be owned by the owner at least the major portion of the year to be considered primary residence. It's also in a location relatively convenient to the owner's principal place of employment. It is the address of record for such activities as federal income tax reporting, voter registration, occupational licensing, and similar functions. Many lenders have caught on to this in terms of making sure that the owner occupancy loan program is coinciding with the veteran's intent. Now, they do field audits, but it's not usually common to check on post-closing owner occupancy. But there has been a rise in the industry to notify the veteran that they may check for primary residency. The second notice in terms of using your VA is you can use it for a second home. Again, the second home qualification status varies from lender to lender, but it is what we call a make-sense transaction. The veteran can use his eligibility to purchase a home as a second residence. The second residence qualifications can be vacation, can be due to work location. There are many different variables that need to be discussed, and that's something that needs to be addressed between the realtor and the loan officer up front. If the veteran has intentions of a secondary home, it's very important to get the loan officer in front of that veteran to make sure we have a solid story to tell the underwriter on the intent of second residency. One quick note, VA does not allow non-owner investment purchases using the VA program. That's right. A veteran cannot purposely, with the intent to purchase and rent out the property he's using his eligibility on. They do not allow that on a VA loan program. Okay, property eligibility. Let's talk about that for a second. So as I stated earlier, the 4 types of properties, you have your single family, 1 to 4 units, condominiums and PUDs, and townhomes, and also manufactured homes. But did you know in regards to condominiums, it's very important, it's critical to know if the condominium that you're purchasing using VA finance is a VA-approved condo. Now, how do you find out if a property is VA condo approved? Well, I provided a link, and it's in the attachments. It's very important to go online, get the legal description of the property, of the condo, and check it on the VA-approved condo list. Many times have happened where the listing party does not know if the condo is VA approved, and unfortunately, it takes just one quick check on the VA link to find out if the condo is approved or not. And there are many reasons why a condo is not VA approved. Many times it could be the owner occupancy ratio is low, and VA does not want to have the veteran occupy a property with more renters than there are owners. There's another reason why that could be from an HOA going bankrupt or having some deficiencies in the property in terms of the structural hazards of the condo. The condo could have gone through some litigation, which VA has taken it off the list. The point is, it's very important to use the link that's been provided in the attachment to find out if the condo is VA eligible. Let's talk about property flipping for a second. VA will not lend, or the lender using a VA loan will not allow a veteran to purchase a property if the property listed has been flipped in 90 days or less. Let me repeat that. So if the listing of the property is previously owned by investors and the investors have improved it and have wanted to flip it to sell, a VA buyer cannot purchase that property or go into contract unless that property has sat 91 days. So VA is very aware of property flipping. It's not that it's illegal or anything. They just don't want a new VA buyer to occupy a property that has been sold and flipped in less than 90 days. So make sure when you're looking at the listing, if the property has been sold within 90 days, you cannot close a VA loan with a property that has been flipped for less than 90 days. 91 days, everything's fine. As I stated earlier, very important, very common mistake is not checking to see if the property is a condo and the condo is not listed on the VA approved condo list. And again, like I said, the link to find out if your condo is or is not VA approved is provided on the attachment. PUDs are pretty much treated like single family. They're just a house with an association fee. They do not fall under the condo requirements. Again, just the lender will require just an HOA cert, just making sure that the PUD's HOA is regarding lawn maintenance, common areas, rec room, etc. When it comes to modular housing, it does vary from lender to lender, so it's very important if you have a veteran interested in modular home, manufactured homes, it's important to get that in front of your loan officer right away. Now, modular homes are eligible provided that they are covered by a HUD structural engineering report or constructed to the standards of the state which the property and the factory is located by the manufactured home. You must have a state's approval certification. Many of these things, again, I can address individually with you if you're dealing with modular homes and manufactured homes, in particular the ones that are fixed to a permanent foundation. So please, if you have a question regarding VA loans, manufactured homes, please see me at the end of the webinar. Let's talk about the funding fee. So there is no mortgage insurance or PMI on a VA loan, such as a conforming loan or an FHA loan. VA doesn't charge a mortgage insurance. However, they do charge the veteran the use of his eligibility. We call that the funding fee. Federal law requires all veterans to pay a funding fee with the following exceptions. Did you know a veteran who has 20% or greater, if they're discharged with 20% or greater disability, they are not charged a VA funding fee. The VA funding fee also depends and is charged based on the status of the military member. Loans made to veterans receiving compensation for service-connected disabilities, again 20% or greater, are not required to pay a funding fee. Veterans still in service and awaiting discharge who have been related to eligible to receive compensation as a result as pre-discharge disability are also exempt from a VA funding fee. Veterans who, but for the receipt of retirement pay, would be entitled to receive compensation for service-connected disabilities is again an eligible exemption for a veteran who is not going to be charged a funding fee. These are all related to disabilities, work-related disabilities. Their funding fee is waived. Loans to surviving spouses of veterans who died in the service or service-connected disabilities are also exempt the VA funding fee. Now, one thing to note is that you can finance the VA funding fee on top of the conforming loan amount limits. So it is a one-time fee. It can be negotiated in the contract and who's going to pay it, but in most circumstances, and I say the majority of the time, the veteran finances the VA funding fee on top of the loan amount. It's rarely paid by the seller, or it's barely paid by the seller on a negotiated contract. It's typically financed into the loan amount. Now, how to calculate the VA funding fee? I have a nice chart that's in this presentation, and basically it breaks it down in terms of never used the VA funding fee before, if they've used it before and they have a 5% down payment, if they have a 10% down payment or greater. So here's the chart. As it reads, if you are a first-time VA user and you have no down payment, the VA funding fee is 2.15% of the loan amount. Since, again, there's no down payment, the sales price and the loan amount are the same thing. So an example would be a $100,000 loan with a 2.15%. Basically, you're using that to finance on top of the loan amount. You're going to just finance that $2,150 on top of the $100,000 loan. So that would be a $102,150 VA loan. Now, if that veteran is purchasing a second time, and by the way, a veteran can use his eligibility over and over again. And the only way that happens is if the veteran who's used his VA eligibility once, that loan and that home has to be paid off and closed in order to receive eligibility again. Let me repeat that. A veteran can use his eligibility as many times as he wants. However, when he purchases a home using his VA, that home that he owns must be sold and closed. That means no assumptions, don't pay off the loan. That house has to actually close and be sold in order for that eligibility to be used again. If he's using it again, as you see, with no down payment, his subsequent use is 3.3%. So if I bought a VA home 10 years ago, sold that home, I was first charged at 2.15%, and today I want to use a VA eligibility again, I'm going to get charged 3.3 with a zero down payment loan. As you see, a 5% down payment up to 10% drops me to 1.5 for a first-time user, as well as a subsequent user. If I put 10% down or greater, it's 1.5 again. As you can see, the funding fee is a little different for the reservists and National Guard, as stated in the chart. Let's talk about allowable fees. Now, this is something that is very important for agents to be involved with their loan officer, because when you're structuring a VA offer, many times sellers, listing agents, as well as buyer's agents get very confused on what is allowed and what is not allowed. So allowable fees on a VA transaction. Well, an appraisal fee has to be paid, and typically it's paid by the veteran up front during the transaction. Compliance inspections as well are common fees that are allowed to be charged. And again, when most agents are structuring VA loans, they usually come with what's called a VA no-no. And this means VA buyer is coming with no down payment and no closing costs. So it's very important for the buyer's agent who's representing the veteran to know what are the allowable fees and allowable costs. And as you see this list of allowable fees, these are what are technically are allowed to be charged to a veteran. And if you're doing a no-no, which means no closing cost to a veteran, you need to get an itemization, a very thorough approximation of what these fees will be itemized to be, because if you're structuring it into a VA no-no and you're asking a seller to pick up the closing costs of the veteran, this is the list you need to follow. The next chart is going to talk about the non-allowable fees. And these are fees that VA will not allow the veteran to be charged and either have to be passed along to a seller. And as I stated earlier, Movement Mortgage does not charge an origination fee or any lender-related, I like to use the term, junk fees. Junk fees could be anywhere from the doc prep, as you see on this list, the underwriting fee, a processing fee, an application fee. Those are lender-related. And Movement Mortgage will not charge an origination fee or lender's fees on any VA transaction. So in summary, when most agents come to me and ask about structuring a VA no-no, they want to be able to get the most fair price for the house, but also help their veteran out on negotiating the best offer. And it's very important to be able to find out where is the happy median, and by all means, open up the dialogue with your Movement Mortgage loan officer and ask the loan officer, what can the lender help pay? Because of the fact that we want to give the veteran the maximum amount of buying power, the lender may participate in covering some of the closing costs, like the example I gave you in regards to waiving the 1% origination fee and helping out to pay some of the allowables. We call this a use of rebate. Rebate can be used to help the lender and the agent and the veteran pay for the closing costs. So it's not necessarily having to be tacked on to the purchase price of the future property. It can also be negotiated with the lender helping out with the rebate. And the rebate's generated based on the interest rate. One quick note about interest rates. There is a difference between the conforming VA loan amount of $417 and high balance jumbo. Typically speaking, you will see a discrepancy between conforming rates being about 1/4 to 3/8 lower than a jumbo VA rate. An example would be today's 30-year fixed rate on a conforming loan amount, which is $417, would be at 4% at 0 points. On the same token, a high balance VA rate would average about 4.3% in today's market. So the discrepancy between conforming and jumbo is about 1/4 to 3/8 higher in rate. But again, the high balance and jumbo rate can lend you up to $1 million, whereas the conforming loan amount of $417, and depending on your county, is going to be a lower rate. Any questions?
Okay, this is the moderator speaking, and we'll begin our question and answer session now. Here's how it will work. Again, you have two screens using your GoToWebinar software. You'll need to, in order to interact and ask a question, you'll need to be working from your control panel over on the right to minimize and maximize there. So what you'll need to do is to type in a question in the questions dialog box. Please go ahead and begin typing those now if you have them. It will take me a moment to queue up the first questions because I am actually reading them in order to read them to our speaker for today. If you would prefer to try to ask your question live, that option is available, though not used very often. If you'd like that, you can click the raise your hand button, and that will notify me that you would like to actually speak directly to our day here today, and we'll facilitate that for you as well. So one moment as I queue up the first question. There will be some silence. Okay. The majority of the questions are dealing with downloading the information and contact information. And while I review, to be sure, Yes, the majority of the questions are dealing with download. So what I am doing at this point is copying and pasting the number or the
link.
down link in your dialog box, and I'm sending to all. So now everyone should have that. There should be something notifying you on your screen that says that you've received a link from me. And I'll do it again. You should just be able to click that button, and that'll take you directly to the download. If you click it, it will download directly onto your PC, and you'll have access to it. And there are dozens of questions that all surround the packet. So RJ, if you just give me one more moment to ensure that I'm not missing anyone's question. And if you do have a question, this is the time to ask it. If not, we'll be transitioning to the close.
Yeah, my contact information they can have is, you can give them my cell number if they have a personal one-on-one question they want to ask me.
Okay, I do have a question. It comes from Michael Garcia. His question is, if a lender helps with closing costs, do you increase, does your interest rate increase? Does your interest rate increase?
It can vary because of the new laws that are involved with QM and the Dodd-Frank bill. The lender is no longer allowed to keep any rebate, and it can participate. It can participate in the closing costs of the transaction. A good example would be a 30-day lock versus a 45-day lock will give you the same interest rate, but you might get more rebate back. So depending on the type of offer you're going to make, in my example, I would sell the 30-year lock rate to that agent offering more rebate back. And rebate is offered depending on the interest rate. Obviously, if the going rate is 4%, a 4.25% rate may only make a difference of $10 to $15, but may generate a full 1% to 1.5% back to the veteran to pay for closing costs. So there is a correlation between rebate and rate, as well as rebate and lock-in period. So a 15-day lock would offer you the most rebate, a 30-day, and a 45-day. I would generally quote the 30-day lock-in period unless I'm at the time of loan documents and I can order loan documents. I would quote the 15-day lock-in rebate as well. So there's both can be used. Did that answer the question?
And Michael, if there is a follow-up, please type it in now. In the meantime, I'll move to Maria Sanchez. Her question is, if someone's grandson is in active service, does that help them whatsoever in saving their home from foreclosure? Or would he have to be in the loan to receive the benefit?
That is correct. The son who is active military is not on the loan that's on the house that's being foreclosed, and there would be no direct circumstances beyond control type of qualification for that loan, since the veteran is not on that present loan that's in foreclosure.
Okay. Karen Yeager, her question is, as a widow of a non-disabled vet, can I refinance my home?
The answer is yes. You can. You need to find out the eligibility status, and you'd have to go to the local VA office with a death certificate. A bigger question, has she remarried? These are things that are going to be addressed at the local VA office that she can get in contact. And if you go on to the veteransadministration.org, or .gov, I'm sorry, you can actually locate the nearest regional VA office to find out the actual steps on getting VA status, and you can use that if you are eligible for your refinance.
Dom, and I apologize, Dom Gariona, his question is, how long does a buyer have to wait after bankruptcy to apply for a VA loan?
Good question. So you have two different categories. You have the question is, how long does a veteran need to wait from a bankruptcy? You have to dig a little further and find out what type of bankruptcy, since there's three types. There's a Chapter 7, 11, and 13. And when you talk about the 13 is a negotiated payment plan, whereas a 7 and 11 are full discharges. It's important to find out what the final discharge date is of the bankruptcy, and that is the date that you base it off of. Now again, depending on the circumstances of this veteran, you need to find out what has the veteran done since the bankruptcy in terms of recovering good credit, what is the credit history since the bankruptcy, and that would determine the waiting period as well. So I wish I could give a more exact ruling, but he'd have to answer those questions, and you can reach me back at richard.j@movementmortgage.com. That's richard.j@movementmortgage.com. And I'd be happy to help you identify the exact waiting time from the bankruptcy once we get those questions answered.
And again, more questions in regards to the download link and the information found in the packet. Here is a follow-up from someone who was not in on the beginning. So I'll share this question because it's possible that someone else has it. Fiona Loom, the question is around the eligibility. It says, it sounds like, she said she arrived a few minutes late, and it sounds like only veterans and active military persons are eligible. Is this correct?
Not necessarily. Again, the widowers, the Coast Guard members, people who have received these benefits as well are eligible. And I can give you the link, which again we have eligibility status on the attachment that was given. So the answer to active duty and discharge duty, or I'm sorry, active duty and discharge are not the only factors that would qualify. There are reservists and National Guard. They receive benefits as well. Many people don't know that, and they get the same benefits if they've served 6 continuous years of duty in the National Guard and Reserves.
And with us at our time, and the majority of the questions centering around the link information, we will transition to the close of our webinar today. And Richard, do you have any remarks that you'd like to share with the audience before we turn it over to Jeff?
No, thank you for your time. And again, I want to give quality time to everyone. If you have a one-on-one VA question they want to ask me directly, I can be reached at all those. My email there, my cell number is 619-807-0287. That's 619-807-0287. I'm happy to take your call and answer your specific VA questions, and more than happy to give you that quality time.
All right, thank you, RJ. And I turn the floor over now to Jeff Jabora with Allison James.
Thank you for tuning in, everyone. As you can see, the VA Home Loan Program is a great program. Definitely reach out to RJ if you have any questions whatsoever. We will be sending you an email with his contact information, as well as the ability for you to get in touch with him with any questions that you may have. Thank you very much for tuning in. If you have any questions whatsoever about our brokerage, please contact me direct. I'd be delighted to speak with you, and we look forward to having you attend next month as well.
Thank you for your time today, everyone.
Thank you.